Hi guys, today we will be discussing the Creditors Allowance Journal or CAJ.
The Creditors Allowance Journal is used to record the returns of goods or services previously purchased on credit, and there is a couple of reasons this might happen.
It can be due to incorrect goods that have been delivered, certain goods have been damaged in transit, goods have been priced incorrectly by the supplier, or goods were in short supply. And the source document we use for this is a credit note. So if you want to, I can explain a credit note in a bit more detail. So just leave a comment if you would like to see that. So we know that with the credit note, there is a few accounts that's going to be affected. First, we know we're going to debit the creditor's control. And the reason for this is because the liability is decreasing. And we're also going to credit the creditor's allowance because expenses has decreased. And then we're also going to credit the VAT account, so VAT output. So here we have an example of Bright Wholesalers Creditors Allowance Journal. And by now we should know the explanation of each column, but let me give you a brief overview again quickly. So the credit note number, this column reflects the supplier's creditor's credit note number. These numbers do not run in sequence as the credit note are generated and issued by a number of different suppliers, creditors. These credit note numbers help you trace the credit note in case of any query. Then we have the date, and the date reflects the date that's on the credit note as well. Then the details reflects the name of the trade payable, so the creditor that you bought the supply from. Then we have a folio number, and the folio number is a reference column, the general ledger account number of the relevant account to which the amount is posted is written in here, and this number is used as a cross-reference. Then we have trade creditors, and in this column reflects the total amount of the credit note inclusive of VAT. The total of this column reflects the total purchases returned to creditors in that current month. So anything that you take back will reflect in here with VAT inclusive. Then we have VAT output. So this column reflects the output VAT portion of the credit note. Please note the difference between the VAT column in the Creditors Journal and the VAT column in the Creditors Allowance Journal. In the Creditors Journal, the column is VAT input, so VAT claimable, because the goods have been received, while the Creditors Allowance Journal column is VAT output, so VAT payable, as these goods have been returned to the supplier. Okay, so then the purchases or inventory. And this column records the purchases of the inventory of a business that have been returned to the suppliers. After deducting the VAT portion, this column will reduce the amount of purchase previously bought and the entry into the creditor's journal. Okay, then we have sundries. This column reflects all other goods and services returned during the month. The amount is reflected in one column and the details in the other. It will be impossible to have separate columns under purchases for each type of transaction. So the sundries column is very important. These columns are used to accommodate any type of transaction that cannot be allocated to purchases.
We can say that in some way the Creditors Allowance Journal is a correction of the Creditors Journal. The Creditors Journal is often lengthy, while the Creditors Allowance Journal is shorter. And as mentioned with the Creditors Journal, it is important to record each transaction separately as it belongs to individual creditors.
So there you have it, guys. Thank you so much for watching, and stay tuned for the next episode.